Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Equity markets continue to remain very nervous out there. Certainly the S&P's had probably its worst start now since 2009. But it's interesting to note that at the end of that year, 2009, the market was up pretty substantially. Certainly the valuation towards the end of 2015 were probably a little bit overdone. But now with this pretty aggressive sell-off, some of the valuations again look a little bit overcooked on the downside, and it's just going to be interesting now to see how earnings come through, to see whether they do substantiate sort of a rally in the sort of share price, or whether the fall in valuations there is sort of justified at current levels. Quite interesting to note, obviously with the fall in equity markets, some of these bond markets are showing negative yields. So it's interesting now to see how the sort of investors weigh that up against equity returns, whether you've got a positive return in equities on the sort of dividend yield, or you prefer to put your money into a fixed interest market that's giving you a negative yield. Oil obviously still pretty key out there as it continues to sort of pivot around the sort of $30 a barrel. And it's just going to be really very interesting to see how this sort of pans out in the sort of supply-demand equation. Certainly most analysts are still pointing towards higher prices towards the year end, as some of these countries do reduce their output a little bit. It's just going to be very interesting to see how that sort of supply-demand does rebalance and gets back into an equilibrium. Interesting to note as well, just on that, a lot has been made about sort of Chinese economy slowing down. India's actually had an upgrade on its GDP. It's back up to around 7.6. From around 7.2, so that's just a little bit encouraging out there, and a little bit positive news. And certainly, the Indian economy is expected to take up a little bit of the slack. Certainly China has slowed down a little bit, but again, you've got to remember China's still growing at around sort of 6.8 to 6.9, which is still substantially higher than most of the developed countries. Here in New Zealand, obviously, still a lot of investors looking for income. And it's really quite interesting now to see how it's going to pan out, with potential for further rate cuts going forward over the course of this year. Some analysts are pointing that interest rates will get down to 2% on the OCR. If that's the case, then you're going to see a further fall in term deposit rates, and then the bonds that are coming out from maturity that have maybe a 7 or an 8 handle are going to be reinvested at substantially lower levels than that. And all that points towards sort of potentially a sort of halving of income coming through from investments. And really got to make up that shortfall from somewhere. So if you are interested in discussing the other options out there for income, so call us on 0800 867 323, or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I look forward to speaking to you soon.